Are you a realtor feeling the pressure of a shifting market? And are you prepared to adapt your strategy to thrive? Hey everyone, it's Gord Lemon here from the Real Estate Investment Institute. And today I want to dive into a topic that's really been on a lot of our minds lately, the state of Canada's housing market in 2026. If you're a realtor or an investor, you won't want to miss what's coming up because it's going to impact how we navigate this whole environment. So let's get into it. As we look ahead, Canada's housing market is giving off some serious 2008 vibes, especially what we saw in the US. But of course, we've got our own unique twist on things. Did you know around 70% of real estate agents in Canada sold 0 homes last year? 70%! That's a shocking statistic. And it really shows that many agents are still stuck in the old transactional broker's playbook, while the market has shifted dramatically beneath them. Take a look at Toronto's condo market as an example. Urbanization released figures that show new condo sales hit a 34-year low. 34-year low. That's just 1,599 units sold across the entire Greater Toronto area last year, which is a staggering 95% drop from the peak in 2021. It's a significant shift to say the least. And it gets more alarming. Developers have canceled 28 projects totaling over 7,243 units. That's more than double the cancellations from the previous year. And for those who bought pre-construction condos, well, they're now grappling with appraisal gaps because prices are continuing to sink. Plus, rental demand is weakening due to higher interest rates, creating a perfect storm for investors and buyers alike. Now, let's talk about the banks. The big 5 banks are definitely feeling the pressure, having set aside over $2.5 billion in loan loss provisions last quarter alone. That's just last quarter. That's 20 to 30% of an increase year over year because they know defaults are on the horizon as these mortgage renewals continue to roll in. But here's the twist. While they're worrying about potential defaults, they're still posting record profits. RBC, for instance, reported a net income of $5.4 billion with a B in Q4 of 2025. And together, the big 6 banks raked in a whopping $16.45 billion. How can they be making so much profit? Well, those extended amortization periods, which can stretch to 35 years or more, this allows banks to continue to collect more interest while avoiding messy power of sales and foreclosures. It's quite a smart business move for them, but we have to ask ourselves, what about the average homeowner? So while we're seeing the consequences of this market shift, what about those agents who are still managing to close deals? Well, here's the key difference. They're evolving from just being order takers to becoming true advisors who understand investment strategies. So it's not about chasing volume anymore. It's about providing real value to clients who are asking important questions like, should I buy an investment property? Should I buy it now? Can you show me how to analyze property to be able to recognize what a solid deal looks like? By positioning themselves as knowledgeable partners, these agents are successfully attracting clients who want to make informed decisions. Now just think about it. When realtors stop being viewed as just order takers and paperwork robots, well, they can build loyal relationships with clients, leading to multiple transactions over time. If you're one of those people, you become the go-to person for serious investors looking for distressed deals or buyers looking to get into the market using methods like house hacking to afford the monthly payments. Being able to explain various strategies using number analysis becomes a cornerstone of your business. Now, for all of you watching, have you considered how your approach might need to change in this market? It's no longer about standard services. Your clients need somebody who can guide them through complexities from simple principal paydown strategies to evaluating NOI on multi-unit properties or vetting distressed deals. As we wrap up this discussion, it's clear that it is time for change right now. While many agents are clinging to outdated tactics from the antiquated broker's playbook, top performers are educating themselves and embracing investor-level strategies. In today's complex market, clients don't just want busy or flashy agents. They want trusted advisors who can help them navigate uncertainty. If you found this insight valuable, please consider liking and subscribing to this channel for more content like this. Your support helps keeps us delivering information that empowers you in your real estate journey. Thanks for joining me today to explore the manipulative landscape of Canada's housing market. And remember to stay adaptive and keep learning, because those who embrace these challenges will find new opportunities. See you next time.